Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings. Today we're diving into Traws Pharma, and let me tell you, this report is a bit like a roller coaster full of ups, downs, and a few loop-de-loops that might leave you feeling a little dizzy. Traws Pharma filed a Form 8K, which is basically a current report that companies file to announce major events. The date of the report is February 17th, 2025. It is like a snapshot of what was happening at the company at that moment. The company we are looking at is called Traws Pharma Inc. They're based in Delaware and their stock trades under the ticker symbol TRAW on the Nasdaq stock market. There are a few boxes checked off to say that the report isn't intended to be used for things like communicating with investors about a potential buyout, so we can ignore that. Now, let's get to the juicy stuff. What the shareholders voted on February 17th, 2025, Traws Pharma held a special meeting for its stockholders, done virtually, of course. At the time, there were over 3.6 million shares of the company's stock that could be voted in the end. Over 2.3 million shares, or about 65.6%, were represented, so they had enough people to make decisions. If you want all the super specific details, you can check out the proxy statement they filed with the Securities and Exchange Commission on February 6, 2025. A proxy statement is a document that gives shareholders all the information they need to make informed decisions when they vote, but we're just going to focus on the main points. Okay, the first proposal was about issuing more than 19.99% of the company's stock upon exercise of what they call pre-funded warrants and series of warrants. This had to do with a private placement, or when stock is sold directly to investors without offering it on the open market. That happened on December 31st, 2024. Essentially, they needed shareholder approval because they were issuing a lot of new shares. The good news is the majority voted yes, almost 2.37 million votes for it, a little over 24,000 votes against it, and almost 2,000 abstentions, meaning people who chose not to vote. Proposal number 2 was pretty similar. It was about issuing shares upon exercise of those same warrants, but this time it was specifically for certain insiders, meaning people within the company. Again, it was related to that December 31st, 2024 private placement. The shareholders approved this one too, with similar numbers to the first proposal. About 2.37 million votes for, about 24,000 against, and around 2,000 abstaining. The last proposal was about whether to adjourn, meaning postpone the special meeting if they didn't have enough votes for the first two proposals. This is kind of like a safety net in case they needed more time to convince people to vote a certain way. Even though it passed with about 2.36 million votes for, close to 28.4 thousand votes against, and almost 1.7 thousand abstentions, the board of directors decided not to delay the meeting because the first two proposals had already been approved. So everything went according to plan. Finally, you have the signature section, which is required and serves to acknowledge and authenticate the information provided in the document. Here, the report was signed on February 18th, 2025 by Werner Traws, the Chief Executive Officer of Traws Pharma. So what do we make of this? On one hand, getting shareholder approval for these proposals is a positive sign for Traws Pharma. It means they have the green light to issue those shares, which could bring in much needed capital. But on the other hand, issuing a lot of new shares can dilute the value of existing shares. This means that each share is now worth a little less because there are more shares in total. Think of it like cutting a pie into more slices. Each slice becomes smaller. Now, it's important to note that the filing doesn't give us an explanation of why they did the private placement or what they are planning on using the money for. Assessing Traws Pharma's direction is tricky without more context. The shareholder approvals suggest the company is pursuing a strategy that involves raising capital through issuing warrants and shares, potentially to fund research and development, clinical trials, or acquisitions. This could be a strength if the capital is used effectively to advance their drug pipeline and create value. However, a weakness is the dilution of existing shareholders' equity, which could negatively impact the stock price in the short term. One notable risk is the company's dependence on raising capital through issuing securities. This could become unsustainable if the company fails to achieve its clinical or commercial milestones. It's important to look at Traws Pharma's financials and pipeline to assess its intrinsic value. Without access to that information, it's difficult to provide a specific target price range. It seems like a small cap company, so it would be more volatile and harder to predict its future. Considering everything we've seen, I'm going to lean towards a slightly bullish perspective on Traws Pharma. The shareholder approvals and the potential for new capital to fund growth initiatives are positive signs. However, investors should be aware of the risks associated with dilution and the company's dependence on future financing rounds. Thanks for watching. If you found this breakdown helpful, please subscribe to Corporate Decoder for more deep dives into corporate filings.